Hello and welcome to another update video about Natgas. Not too much happening at the moment on the Natgas chart. Basically, all we can observe here at the moment is consolidation. So we're going to zoom in and take a look at the latest structures and which scenarios could now unfold. The view here on the 4-hour chart reveals that we are likely in this fifth wave to the downside after a fourth wave topped in October last year. And in this fifth wave, we're obviously dealing with 5 waves. My interpretation is that we are dealing with an ending diagonal in which the wave 1 bottomed here in December. The wave 2 topped in January. The wave 3 is likely still unfolding. Then we could get a wave 4 and a wave 5 still. Yeah. It is possible, you could say alternatively, maybe that's even become a little bit more likely with the latest small gap to the upside here. Well, it is possible that the third wave obviously already bottomed here. At the moment, I have labeled it as the third of a third wave, but it's possible that all of this larger third wave bottomed on the 19th of February. So just something to observe there. As I said, it could be that this is simply at the moment part of wave 5 of 3 still. But this is getting quite protracted, what we're dealing with here. So we're going to take a look at all of that. So in summary, basically, my interpretation at the moment, at least, based on the data I have on the chart, based on what I can see, my interpretation is that we should still see one more low on the Natgas chart, maybe even 2 more lows. So in the preferred scenario, actually 2 more lows, and in the alternative, 1 more low, even though I have to say it really depends on what's happening here, because the chart has turned around in my support area, which you might say is good, because that's what these support areas are for. That's true, but it makes the interpretation a little bit more complex and less clear. Because I would have liked to see, liked to see actually, for clarity, a break of support and then a move down into this target area to complete, and I zoom in a little bit, to complete here wave 5 of C of 3. But let's talk about that. So obviously, I shared with you the overall, you could say bigger picture on the 4-hour chart. Let's go to the 1-hour chart now. Let's take a look at these structures here. Structurally, I don't have to make any changes, right? Because the price didn't break below support. The price didn't break above resistance. We're basically still in no man's land. And and that's what makes it particularly difficult at the moment. We had a 3-wave rally between the 18th of Feb and the 5th of March. That's a 3-wave corrective rally. And the move to the downside was also in 3 waves. That typically leaves the door open for a wider so-called flat correction. You can see how well the market is respecting the parameters. We had a rally into resistance, and that was a wave 4. Perfect reaction to what I always say is the ideal target for a 4th wave, and that's here the 38.2 retracement. I will take that resistance area off the chart now. I don't think we need it still at the moment. I'd rather keep the chart clean. Then we had what I would consider a 3-wave move down into support, deep into support, but no sustained break of support. So I call that an A wave to the upside. I call that a B wave to the downside, and maybe now a C wave rally. If that happens, then we are already in the larger degree 4th wave here, yeah? So that was one of the scenarios we talked about. We talked about 2. This one here allowed for a reaction to support, and we said if we see a reaction to support, it might be that this is a C wave rally of wave 4, and then we have to watch this area here between $2.17 and $2.58 for a potential reaction, or for the price to get there. If the price gets there, that's the next confirmation that we are in the larger degree 4th wave. Then we can get rid of the idea that in the 3rd wave we might still get another low. Okay. Already now I would say this has become less likely due to how this structure looks, but still valid as long as we stay below the as long as we stay below the $2 mark, which is the circle wave 4 high. So at the moment we could say due to the gap to the upside, as long as the last swing low is holding, that's a clear level to watch. As long as this level is holding at 159, we could see a C wave rally to the upside in a larger 4th wave. But I would have to adjust the area there slightly to $2.10 and $2.50 even though I have to say 250 would be a bit of a stretch for a C wave. Normally we would say rather in the lower half of this area. Yeah. Bear in mind there is structural resistance around the $2 mark as well. And then I would say pay attention as the price approaches the 100% extension level, because this is also where we have the descending trend line of the parallel trend channel, and that could provide additional resistance. And if we really get up there to around about $2, $2.10 maybe, well, and if we then see a reaction, that might be the start of wave 5 to the downside. And the problem that I have with this chart at the moment is obviously that the rally from the February low was only in 3 waves. So it definitely lends itself to the interpretation that this is a corrective rally, which it is because it's not in 5 waves, and that it will eventually give us another low. The thing is, probabilities when we're dealing with 3-wave rallies, they are at least not clearly bullish. Of course, something more bullish could develop out of this, like a diagonal pattern. So it's possible that this was the wave 1 of a diagonal. That's a possibility. That's not necessarily highly probable at the moment. Okay, and that's the difference. Where anything is possible, not everything is probable. A diagonal at this stage would not be a high probability pattern. So 1, 2, this would be a wave 2 low. Then we'd be looking at 3 waves in wave 3. Then 3 waves in wave 4, 3 waves in wave 5. And if I see 5 waves above resistance, then yeah, that would be our confirmation that the low is in. Until then, we can only really operate with what we see here, and that is a 3-wave corrective rally, which is not yet clearly bullish. Short term, maybe here, as long as the last low is holding. I mean, anybody who wants to, how should I say, get positioned for that potential, or anybody who wanted to get positioned for that potential that something more bullish could unfold, could obviously use the support area. That was also what it was for. But obviously, again, not a high probability pattern. Or, anybody who still wants to get positioned for that scenario could just set a stop below that last swing low, because that potential that I just showed you with the larger diagonal unfolding, well, that would be invalidated with a break below that last low. So that's my update about Natgas. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, feel free to check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.